All right, guys, welcome back to AWMFX. Good morning, good afternoon, good evening, or good night. So hopefully you guys out there are doing great, earning a lot of money, and then in great health. All right, remember, take care of your body. All right. So I believe some of you are eagerly waiting for this chapter episode because this is what things going to start to get real. What I mean is that the first two chapters is all about introduction, about explaining what is supply and demand, of course, support and resistance, and also significant support and resistance (SSR), and how we going to use it. All right, it's just an introduction, just a surface, and also about the market structure, about the trend, uptrend, downtrend, or sideways, or maybe we are looking at a major trend or a minor trend. So if you guys, any of you have missed that out, do check out on the first two episodes. So this is the third episode, and we are getting more into real. What we're gonna explain today, what I'm gonna explain to you guys that you're gonna get is that the movement of a supply and demand, how I define it, because from there I will can let you know the first type of setup. All right, my favorite setup, which works magnificently for me. All right, I don't know how to pronounce the word magnificently. Yeah, something like that. For me, excellent. I can tell you, really, really, very good. Okay, I've earned a lot of money from the simple setup. Of course, sometimes human are tend to be more complicated. Don't worry. The next chapter means the chapter 4, I'll explain more into more complicated setup. All right, it's all totally different, but using the same concept. So, if you guys remember this movement over here, this is supply and demand balance and imbalance. So, if you remember a story about the face mask that I told you in episode 1, all right. So it's all about the supply and demand. When the supply is higher than the demand, there is always an imbalance and push the price downwards. All right, supply higher than demand. So what happens is when the demand is higher than supply, it will push the price higher. All right. Of course, there is other name for it is a accumulation and a distribution. So it does not matter. All right. So from here, this movement over here, we are going into a more detailed type of movement. All right. So let's start. All right. Okay. So the supply and demand movement is actually consists of four type of movement only. Very, very simple four type of movement. So the first type of supply zone is a rally base drop. So it's a very simple, it's a rally, then having a base, and then it's a drop. All right. And the top area here is what we define as a supply zone. All right. So the second type of supply zone is that drop base drop, DBD. It's a drop base drop, and this will be the supply zone. So if you look at both movement, the end result is that it's pushing the price downwards. All right, it's pushing the price downwards, or in the other sense is that it's selling. All right, it's selling. So the next will be, of course, the demand zone. It will be opposite of this movement over here. So it will be a drop base rally. All right, the base over here will be the demand zone. And of course, definitely there is a rally base rally. And this will be the demand zone right here. So it seems very, very simple. Of course, it's in a line form, but in the actual chart, a lot of you get very, very confused. I'm going to show you a lot of things of a lot of example. So don't worry about that. But I'm going to leave you with one very, very important motto. I'll say motto, or it's a very simple sentence. All right. It keeps me, always remind me wherever I have a setup, I always remind myself what I should be doing. It will be very simple. Always sell at supply zone and buy at demand zone. That's it. Simple. All right. So every time when I have a rash idea of going into a trade, because sometimes the market push the price very high or very low, I might tend to go into the trade like riding the wave. But then suddenly I always remember myself, always sell at supply, always buy at demand. Then from there, I'll be looking at maybe lower time frame, look out for supply zone or demand zone that we're gonna push the price higher or push the price lower. So I'll place my order there. I have a more defined entry. All right, I have definition. I definite my entry. I know where I should be going in. All right. So next is that simple is how we mark our supply zone. All right, how we mark supply zone. So the first example over here is that let's assume that there is a bullish candle, a small bullish candle. So what happens is that suddenly there is a movement downwards. All right, a movement downwards over here. So this will be the supply zone. This will be my supply zone. All right, I'm gonna mark at the open, all right, of this first candle towards the high of the candle over here. So there is a lot of YouTubers out there or a lot of gurus out there. They have their own definition of marking a supply and demand zone. But I gonna share with you how I look at it. So because it works excellently to me. And of course, I would say that it's not 100% because sometimes I do miss some trades because of the spread. Sometimes I place it too refined, and I will get frustrated because it really hit at the edge here and then just drop, and it does not trigger my trade due to the spread. But it's okay. I know that it's correct. As long as I know that it's correct. So the second type of supply zone that I usually mark is that actually is the same with the first type over here. But the difference is that, all right, the high of the candlestick is different. All right, if you can see that this is higher, then the other one is this is higher. It's the same story. Whichever goes higher, then it's okay. All right, so this is how I mark my supply zone. All right, so the third kind of supply zone is that there is two small bullish candlestick, and then suddenly there is a bearish candlestick. Sorry for that. And the supply zone that I'm gonna mark out is over here. Right? It's over here. So this is my supply zone. So of course, I'm not going to more detail about which candlestick is higher, but I'm gonna ask you something that maybe you just ponder. Let's assume in this scenario, all right, this third type, what happened if the first candlestick over here, or maybe this candlestick has a higher shadow than both of these, all right? Where should be your supply zone? All right, is it supposed to be exactly like this, or should it be bigger due to the high of the candlestick? All right, you ask yourself. All right, you ask yourself based on these two examples over here. I cannot give you everything. Ask yourself, ponder, then you'll understand. All right, so the fourth type of supply zone that I usually mark is that something like this. So there is a 3 candlestick, 1 bullish and 2 bearish. Of course, what you can see over here is that this bullish candlestick, all right, this bullish candlestick is engulfed not only by 1. It cannot be happen by 1, but 2 candlestick. All right, 2 candlestick. So my supply zone will be over here. All right. So what is the main point of all this movement over here? All right, the important notes is that there must be a significant drop. All right, the candlestick, the red candlestick, you can see that. All right, in the second or the third candle. And then we mark from the open of the first candle to its high, all right, example over here, or second candle, whichever it is higher, right? So it is about all these things. All right, so from there, we flip it, the chart, and we have our demand zone. Right? Similarly, it's the same. Right? But this time we have a bearish candlestick, small bearish candlestick instead of the bullish candlestick. And suddenly we have a very significant rise or significant rally of a bullish candlestick. So your demand zone will be in this yellow box. Right? So the second type will be exactly the same, but just that the low, we are talking about the low over here, is different, and the demand zone, sorry, I think there is some mistake over here. It's supposed to be at the open, all right, at the open of the candle. Sorry for that. So it's exactly at the supply is at the open of the candlestick. All right. So the third one is, yeah, this is the correct one. So at the open. All right. So if you can see this example over here, what is so special about this, different from this is from the previous two, is that this example, this type is engulf one big candlestick engulf two small candlesticks. So the next question a lot of people will ask is, what happens if there is number 3 or number 4 and then one big candlestick engulf everything? It depends. It depends on what is the situation. I wish I cannot tell you about that, because it's all about experience, about different situation, right? And I don't basically trade deal on this demand zone or supply zone. I have to combine it with my significant support and resistance (SSR) and also market structure, which give me a very, very good advantage. All right, don't worry, I'm gonna share everything with you guys. So over here, if I have another candlestick, which is a small one, usually what I do is that I only take the 2 numbers. I only take the last 2 numbers. All right. So if it does not trigger due to the candlestick over here, let it be. Trading is like that. All right. It's not engineering. It's not precise like creating a new car, BMW or Mercedes or whatever. Trading is about the feeling. It's about the, how should I say, it's about the tuning. All right. So example, if some of you like to play sports like football or maybe badminton, or maybe like me, I like to play table tennis. So it's not about how you hit the ball or how you kick the ball. It's about the feel, how you control it. So it's exactly same with trading. All right. So the fourth type is the flip of just now, the supply zone. So our demand zone will be over here. All right. One candlestick is engulfed by 2 candlesticks over here. All right. So this will be my demand zone. And of course, the criterion important notes here is that there must be a significant rally or in the third candle. So in the second or the third candle. All right. Then mark from the open of the first candle. All right. So this 2 is a bit wrong. Sorry for that. It's supposed to be over here. All right. Or candle 2, whichever is lower. All right. Whichever is lower. So now I give you a bit hint. All right. I give you a bit hint over here. I'm going back to the supply zone so that it's more clear. All right. Pardon me. All right. Over here. So usually what I will do, is me, is not you. So don't trust a single word that I say. Go back and backtest. If this candlestick over here, all right, if this candlestick over here has a very, very small bottom shadow, all right, a lower shadow over here, all right, in this example, it might be a bit long. So let's assume that it's a very small. Usually, I will take that zone together with it, all right. I will take the whole zone together with the small shadow. Similarly, with the demand zone, it's the same. All right. So I'm going to show you the supply zone because it's easier to see. All right. So sometimes it's not about the open. Sometimes if the shadow is very small, I'll take it. I will take it because I might increase my risk to 1 or 2 pips. Why not? Why not 1 or 2 pips? I get my entry, my defined sniper entry. Why not? All right. So I'm going to show you on the chart what does it looks like. All right, so this is the chart that we're looking in, is gold spot versus USD. All right, so first of all, you must have a proper proper platform. I'm using TradingView. All right, for me, TradingView, of course, the minimum requirement for me is the Pro, which I have to subscribe. If you guys, any of you guys wanted to support me or haven't subscribed to TradingView, you might click the link at the description, and then I'll say that you become a partner. All right, you can try it for free. And if it's any time that you feel that you want to back test Because if you use Pro, you can do this thing. You can cut the chart and then do back testing. All right, you can do back testing. So if any of you wanted to be like a friend or partner with me on TradingView, you might click the link and register under my account. And then if you go for Pro, I believe both of us will get a referral $30. All right, so that next time when I go, I subscribe, I might get a discount, maybe. All right, does not harm. Okay, so come back to here. One of the important things that you need to do is that you must know how to do, I call it mapping. All right, mapping. What is mapping? So you have to, of course, define your color. It depends what color you want. And from the 4 type of supply and demand, you have to mark out your supply and demand. So example, I'm taking from this point towards this point. So I have to mark all the supply zone first. Okay, so example over here, this is my supply zone. But where is from this candle, these 2 candles, this is my supply zone. But where does it end? It ends over here when a candle hits it, all right, and drops. Then what happens is that it creates another supply zone. You see it? This is how I define my supply zone. And then does it hit anything? Not yet. Oh my God, I'm giving you a big tips over here. Not yet. Oh my God. Might be something happening. All right. And then just do whatever you want, but define all your supply zone first. So I have one supply zone over here. All right. It's very obvious. Supply zone over here. And then it ends at this point. So it's no more longer valid. And I have a supply zone over here. Right, so this is an example of how I do my mapping, right? It can be over here or here. Yeah, this is more accurate. And then supply zone over here. This is my supply zone. 1 candlestick engulfed by 2 candlestick, and then it ends here. All right, and then some more. This is a good way of practicing how the price moves. You can see that the price always hit. Sometimes if you wonder, if you have not encountered this video, you might ask yourself, how come sometimes the price will stop at certain area and then reverse? This is why it happens. All right. But is it very accurate? No. So wait, there is one over here first. I'll take this off. I'm going to explain something later. So that is one supply zone over here. All right. And it ends over here. And then of course there are small, all this small one, not interested. Right? You might practice yourself. It's okay. You just practice on yourself. All right. So is this mapping 100% accurate? Do you think it's 100% accurate? No. All right. Nothing is 100% accurate. So this is the example is if it's not accurate. So the price, there's supposed to be a supply zone over here. All right. And then the price ignore and then go all the way. Why does this thing might happen? First of all, there might be a news here. All right. What kind of news? Maybe NFP, non-farm payroll, or maybe FOMC. I don't know what news. Hidden news, or maybe the president, US president, speak about something irrelevant and then make the whole world get angry and then sell off USD or something like that. I do not know. So there is always a possibility that the price will just ignore all this zone and go bulldoze all the way. All right. So when this happens, you always must have a friend, and your friend, you can use it for free. That is called stop loss. All right. Always remember to place your stop loss. So you define all your zone, you define all your supply zone. Then after that, what you're gonna do is that once you feel that is satisfied, now you change your color of the box to other color, maybe to red color. All right. Then you define your demand zone, right? Demand zone. How come the price break over here? Just define all your demand zone, right? Just do this practice, which I call it as mapping. How come the price react at this point, right? How come the price have not react at this point? some fresh. This is what we call as fresh zone because it has not been tested. All right, then we have a few fresh zone right along the way. So from here, you can see that I'm doing my mapping, and then you can also see very clearly how the price move or stop. All right, how come sometimes the price stop at that certain area? All right, so this is how I define my supply and demand zone and do my practice of mapping. So now that you know how to define your supply and demand, and sometimes you might practice mapping, doing mapping, we are going into the first type of setup, right? Using combining the supply and demand and support and resistance. Of course, I'm showing you here is a support and resistance that I've shown in the second episode. So if you remember about the story that I told you, the bouncing ball, all right, the ball that don't lost any energy bouncing, and the apartment with the hole. So it's the same thing. When a price went up, it hit a resistance, it bounced back, and when it hit a support, it goes up. All right. So what happened is that this resistance over here, all right, this resistance over here, there is a possibility when the price comes back to this area, it will become a support. All right, the ceiling has become the floor. Similarly, with this case, all right, it's supposed to be a support, but if the price go through it, all right, the next time the price comes back, it becomes the ceiling, which is something we call as a resistance. So from here, I'm gonna give you the first type of setup. Okay, so the first type of setup is what we call as a RBS and SPR. What is RBS? It's resistance become support. All right, very simple. The resistance has become a support, and also the support become resistance. It's the same, but just that one is on the bullish side and one on the bearish side. So how do we look at it? So first of all, we have a movement. All right, so it's a resistance. The price goes through it. Then when the price comes back to this area, very likely it will become a support. It will become a support. So it keep on bouncing, keep on bouncing, keep on breaking. Remember about the trend that I told you how to read the market price, the price market. The trend, all right, keep breaking, come back, keep breaking, come back. So now we are catching all the trades at this point, all right, and move along with it. So the next one, of course, will be the SPR. The support became a resistance. So we have a support, price went through. So very likely when the price comes back to this area, right, it will become a resistance. So this is a very, very simple explanation of SPR, RBS. Not only that, I will go into the real chart. I'm going to explain to you exactly what you should be looking for. All right. Of course, this is the example of a RBS. All right. So what is a RBS? RBS is that resistance. All right, the price resistance. So once it has broke, then it becomes a support. Can you see it? It becomes support. So there is a lot of movement such as this. Breaks become support. Breaks become support. But this example only show you how to say the rough idea of RBS, right? I'm going to give you a definition of how to entry to be more precise and more accurate, right, later on. So this is an example of resistance becomes support. So next, we're going to show you what is a support become resistance, the SBR. So here is the rough idea. The support become SBR, all right? So British pound, New Zealand dollar, New Zealand dollar, correct? So the price break, and then there is the price when it comes back to this area again, it will bounce. All right, can you see it? The price break and then comes back to this area and then bounce. So this is an example of SPR. Of course, like I told you earlier, this is a rough idea of a SPR. That is a very accurate definition so that you guys can go into the trade more accurately later on. Right, so keep that in mind. All right. All right, so here we have an example of a good example of support become resistance. All right, so if you can cannot imagine what is resistance become support, you just flip the chart. So what is the definition of entry for this type of setup? Okay, so first of all, let's assume that we have a movement something like this. All right, something like this. Right, the price has broke the previous low. All right, has broke the previous low, the support. So we are expecting the price, next time the price comes back to this area, it will react and then drop. But is it always the ideal? No, it's not always the ideal. One of the reasons is that you do not know where to entry. There is no clear entry. So I'm going to share a few tips with you guys. So this is the things, the important things, right? I'm going to explain it slowly. First is that it has to be a clean break. All right, it has to be a clean break. All right, I'm going to explain it. Don't worry. Then second, that there is a SSR. Okay. Then the third one is that at the break, there is a zone. I'll say S and D zone. All right, S and D zone. So it's easy to find. All right. So with these three rules over here, or maybe there's some. Number 4. Maybe MPL. Okay, right? A lot of people do not know what MPL is. Okay. So what do I mean by it has to be a clean break? So when the price break this low, the support over here, it has to come down nicely. All right. What does it mean comes down nicely is that it does not hesitate. Means that it does not comes down, goes back up, comes down, goes back up, then comes down, and then goes back up. Like hesitate, it takes a very very long time to break this support. So this is not what we want. All right, it has to be clean break. It has to come down all the way, and of course in the middle there might be some zone. It's okay. All right, it might have a MPL. What is an MPL? MPL looks like this. All right, when the price reach the zone, it will have this movement. All right, and then goes up before it breaks. So this is also a very nice setup. So your demand zone is your support is over here, somewhere around here. So this is also a very good entry. All right, the entry will be somewhere around here. All right, so this is what it means by clean break and then the zone. So what is SSR? So you need to look to the left. All right, always need to look to the left. Need to look to the left. And make sure that this line, this support over here, there is a lot of rejection. All right, rejection from where? It does not matter whether it's from the top. All right, it's from the top or from the bottom. All right, if it rejects both way, then this is a very strong support line. All right, and when it breaks, have a zone, that is how you go into this entry. So it's very easy to define, easy to understand. I'm going to show you an example. All right, so one example over here. Right, so you can see that the price, this is your line over here. Right, your line. Right, this is your line. So when the price breaks, all right, it has a very clean break. All right, it does not go like this kind of hesitation all the way. It cleans break, and then you have some zone, and your defining of zone is from here to here. This is your zone. And what happens is that when the price comes back exactly to this area, it reacts and then drop. So all right, so let me move the rules down here so that you can see it clearly. All right, so it has to be a clean break. It is a SSR. Yeah, a lot of rejection along the way back here too. Right, a lot of rejection. All right, then for this case is a zone, not MPL. Right, it's a zone. So a very nice entry. And I'm showing you another example. You can see it over here. So this is another example. So this is another good example. All right, so you see that there is a rejection a lot along the way. A lot of rejection. Can you see it? A lot of rejection. Though, is it a SSR? Yeah, very obvious significant support and resistance, right? Is there any more going down the road? Yes. You can see a lot of rejection along the way. So this is a very beautiful kind of setup. Then clean break. Yes, it's a very, very clean break, right? It breaks, is no hesitation. It breaks all the way, but just make some small zone along the way. It's okay. So there is a zone. Yes, there is a zone. And this is an excellent zone. So where is your supply zone over here? Sorry, supply zone. This is your supply zone. You might put it over here. All right, you might define over here or define over here. It does not matter. It's okay. So price comes back to this zone, right? Price comes back to this zone, hit it, and then drop all the way again. All right, so this is a very classical example, two classical example of a SPR RBS. So this is the first setup that I promise you guys, right? Easy to understand, definition is there, example is here. I don't know what else you need. Okay, so you guys can keep practicing more and more on this kind of setup, right? I'm not going to drag this episode too long. I believe it's around over 30 minutes to 40 minutes. So you have to know one thing, go back test, do your mapping, know how to define your supply and demand, and of course, go back and read and go back and find this kind of setup, the SPR RBS. It always happen and it is very, 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 very profitable. I can tell you the hit rate is very, very high. Okay, so I'm gonna end the third episode here. So on the fourth episode, I'm gonna show you a more complicated kind of setup. A lot of people like it. That's the QML, the Quasimodo line, the Quasimodo setup, buy and sell. So if you guys like to support me, do give me a like, the thumbs up, all right? Hit the bell button, and of course, subscribe, all right? Just subscribe so that more and more people will get exposed to this kind of trading method, all right? So without dragging any further, so see you guys then. I'll see you guys. I'm gonna upload another next video, another episode on